Deutsche Bank warns Powell's ouster among top underpriced market risks in coming months. Deutsche Bank has flagged the potential ouster of Federal Reserve Chair Jerome Powell by President Donald Trump as one of the largest underpriced event risks over the coming months, and that it could collapse both the currency and bond markets and would lead to a spike in inflation expectations. The warning follows remarks by Russell Vought, director of the Office of Management and Budget, accusing Powell of grossly mismanaging the Fed and saying the central bank was way over budget, pointing to the ballooning $2.5 billion in Fed HQ renovation costs. The accusation potentially opens up an avenue for Trump to seek Powell's removal. President Trump has long criticized Powell for not lowering interest rates and has reportedly considered replacing him before the end of his term. Just this week, the New York Times reported that Trump showed a draft of a letter firing Powell to a group of Republicans. Trump later said he hasn't drafted such a letter. He said it's highly unlikely he'll fire Fed Chair Jerome Powell unless he has to leave for fraud, but added, "I don't rule out anything." At the time of publication, Deutsche Bank's George Saravelos noted polymarket data showed a 15% chance of Powell's removal, but that figure has since climbed to 21% as of early Friday morning. However, the consequences could be severe. The empirical and academic evidence on the impact of a loss of central bank independence is fairly clear. In extreme cases, both the currency and the bond market can collapse as inflation expectations move higher, real yields drop, and broader risk premia increase on the back of institutional erosion. Interestingly, the impact on equities has been far more ambivalent, given they are ultimately a claim on real assets, he said. It is hard to quantify the impact on FX and rates, but in the first 24 hours of an announcement of a Powell removal, we would expect a drop in the trade-weighted dollar of at least 3 to 4%, accompanied by a 30 to 40 basis point sell-off in U.S. fixed income led by the back end, Saravelos said. Market response would hinge on Powell's successor, remaining Fed unity, and the macroeconomic context. In sum, we consider the removal of Chair Powell as one of the largest underpriced event risks over the coming months, Saravelos concluded.